Welcome to today's recorded interview with the U.S. Department of Transportation representatives, highlighting the major changes in the department's Disadvantaged Business Enterprise Program regulation that were made on October 2nd and effective November 3rd, 2014. I'm Parker Bennett with the Departmental Office of Civil Rights, and I will be moderating the session along with my colleagues here at the Departmental Office of Civil Rights, Mark Bentino and Adam Rivera. Beth Newman and Jean Roth with the Federal Aviation Administration, Brittany Berry with the Federal Transit Administration, and Martha Kenley with the Federal Highway Administration. Today's recorded event, lasting approximately 1 hour, is posted to the Departmental Office of Civil Rights website and can be shared. We'll be speaking about some of the major changes to the rule that were made when it was published in the Federal Register on October 2, 2014. This final rule revised portions of the DBE program regulation found at 49 CFR Part 26. We are excited to roll out this training session to walk you through the revised rule's major features. If you haven't already, take time to read the final rule and preamble. It's posted on our website. The revised regulation, signed by Secretary Foxx, is effective as of November 3, 2014. It covers 3 areas. First, the rule revises the Uniform Certification Application and Reporting Form, creates a DOT Personal Net Worth Form for use by applicant owners, and collects data required by the statute authorizing the Surface Transportation DBE program, known as MAP 21. Second, the rule strengthens certification-related program provisions. And third, the rule modifies several provisions concerning overall goal setting, good faith efforts, transit vehicle manufacturers, and counting for trucking companies. We will cover all these topics during the session, including new forms and requirements and revisions to certification provisions and procedures. We'll also delve into the new summary suspension provisions and revisions that were made to goal setting, good faith efforts, and counting. Joining us to talk about the revised forms is Mark Bentino with USDOT. Mark, is there a new standardized personal net worth form for applicants?
Yes, this new form, and not any other, is to be used by all applicant owners claiming economic disadvantage. Certifiers must use this form without modification. The Departmental Office of Civil Rights has made the form available in its green fillable PDF format for recipients to distribute, which is also posted to the website. However, the form should not be submitted to USDOT, but to the appropriate state UCP agency.
Is the personal net worth form required for all owners of a firm?
No, a personal net worth statement should only be requested for those owners whose economic disadvantage status is relied upon for DBE certification.
And does the final rule permit recipients to request backup documentation for assets and liabilities?
Yes, but within reason. Language in the existing rule that requires requests for supporting documentation not be unduly lengthy, burdensome, or intrusive remains unchanged. We intend for all supporting documentation requests to serve a useful purpose that addresses a specific concern regarding information in the form, and not in any way operate as authority to collect all possible documentation for each listed asset or liability.
Were there any changes to how the economic disadvantage requirement is applied?
Yes. While the $1.32 million cap remains the same, the Department did incorporate, with some modifications, its existing guidance on economic disadvantage directly into the rule.
Can you give us some details?
First, remember the purpose and intent of the economic disadvantage requirement is to ensure the program reaches only those disadvantaged individuals adversely impacted by discrimination and the effects of discrimination. The presumption of economic disadvantage is rebutted when an individual's personal net worth exceeds the $1.32 million cap. We made clear in the rule that the presumption also may be rebutted if the individual's personal net worth falls below the cap, but the individual is, in fact, too wealthy to be considered economically disadvantaged. The rule states it in this way: if the statement of personal net worth and supporting documentation demonstrates that the individual is able to accumulate substantial wealth, the presumption of economic disadvantage is rebutted.
What factors may a recipient consider to make this determination?
The rule provides some examples of the kind of evidence recipients may consider, such as whether the average adjusted gross income of the disadvantaged owner over the most recent 3-year period exceeds $350,000, whether the total fair market value of the owner's assets exceeds $6 million, whether the person's assets collectively for example, high income, an expensive house, a yacht, etc., may lead a reasonable person to conclude he or she is not economically disadvantaged.
Is a proceeding required to rebut a presumption of economic disadvantage in this case?
Yes, the disadvantaged owner must be given an opportunity to challenge a recipient's claim that the owner has accumulated substantial wealth, following the same procedures as a 2687 proceeding.
There were changes made to the Uniform Certification Application Form, which Gene Roth with the FAA will explain. Gene?
The Uniform Certification Applicant Form, in use since 2003, was revised, and applicants are to use the new form without change. Some items were shortened or removed, while some new ones were added. For example, in the banking information space, we removed the need to insert the bank's phone number and address. In the bonding entry, we removed the need to specify the bond binder number and the bonding agent contact information. Let's focus on the new items. You'll see we added space for the dates of any site visits conducted by other UCPs. If you see it checked, ask that state for a copy. We also added space for the applicant to describe its primary activities, the products and or services it provides, and NAICS codes it thinks are most applicable. We reworked the control section of the application, breaking down the tasks more commonly performed and asking applicants to specify how often they perform these tasks. This helps the certifier to understand, prior to going on the on-site visit, the amount of time owners and others devote to specific areas of the firm's operations.
Has the application checklist changed?
Yes. We sought to eliminate some burden on applicants and move some documents that were mandatory to a category we termed optional. Recipients may request these optional documents on a case-by-case basis when appropriate and necessary to determine eligibility. Remember, though, the owner's affidavit attests to the fact that information contained in the application is true and correct, and the applicant bears the burden of establishing its eligibility for certification. We removed the requirement that the firm submit state tax returns, but added to the checklist the need to submit resumes of key personnel for the firm and federal tax return filing extensions.
How about the uniform report of DBE awards or commitments and payments? Did the department make changes?
Yes. We clarified the instructions, added categories to collect information on minority women-owned DBEs, and now ask for a collection of information on actual payments to DBEs on ongoing contracts performed during the reporting period. That is, in real time.
There is a new reporting requirement for recipients in the final rule. I want to introduce you to Adam Rivera with the Departmental Office of Civil Rights, who will be the person reviewing the information reported. Adam, explain what's new.
To conform to requirements in the Department's Surface of Transportation Reauthorization Act, known as MAP 21, each state Department of Transportation, on behalf of the entire UCP, must submit to the Departmental Office of Civil Rights by January 1st, 2015, data from the State Unified Certification DBE Directory. You will go through your directories and count the number of firms controlled respectively by 1. White women, 2. Minority or other men, and 3. Minority women, and then convert those numbers to percentages. You would also report the location of firms in the state, meaning whether they are home state or interstate certified. We'll be compiling this information here at the headquarters. Again, the first report is due January 1st of 2015 and each year thereafter.
Let's turn to certification eligibility standards and focus on size, ownership, and control. The department's statutory size standard may be adjusted for inflation. Adam, did the final rule make an adjustment?
Yes, the previous statutory gross receipt cap of $22.41 million has been raised to $23.98 million. That is to say, to qualify as a small business under the regulation, the average annual gross receipts of a firm, including its affiliates, over the 3 previous fiscal years shall not exceed this cap, $23.98 million. Firms must still meet their respective size cap for the applicable NAICS codes that describe the kind of work the firm performs, which may be lower than $23.98 million.
Turning back to Mark with USDOT, several changes were proposed to the ownership criteria of 26.69. Were all adopted?
No, but many were adopted, and we explain why in the preamble. Let's review them. First, in the context of ownership, certifiers must consider all the facts in the record viewed as a whole, including the origin of all assets and how and when they were used in obtaining the firm. All transactions for the establishment and ownership or transfer of ownership must be in the normal course of business, reflecting commercial and arm's length practices. The new 2669C reflects several changes. We added examples of what is meant by the requirement that the ownership interest of the disadvantaged owners must be real, substantial, and continuing. We also clarified a phrase in C3 that has caused confusion. The old rule required that disadvantaged owners must share in the risk and profits commensurate with their ownership interest, as demonstrated by the substance, not merely the form of arrangements. We saw a tendency by certifiers to interpret the phrase profits commensurate with their ownership interest to mean that the disadvantaged owners must be the highest paid persons in the firm. The revised rule clarifies that for ownership purposes, the disadvantaged owners should be entitled to the profits and loss commensurate with their ownership interests. Any terms or practices that give a non-disadvantaged individual or firm a priority or superior right to a firm's profits are grounds for denial of certification. This is broad and is not meant to be absolute. There may be circumstances such as a franchise where such an arrangement may be acceptable.
A change was made in the regulations governing control. What was it?
We established a presumption of control by non-disadvantaged owners who remained in the company after transferring the company to a disadvantaged individual. This is a rebuttable presumption, meaning that the recipient may still determine that the relationship between the former owner and the disadvantaged individual or applicant concerned does not give the former owner control of the applicant or DBE firm. The preamble has some examples, such as remaining with the firm to maintain contacts with previous customers, remaining temporarily to assist with the transfer, or maintaining a small ownership interest or minimal participation in the firm with no control. In these types of situations, that presumption can be rebutted by clear and convincing evidence that the transfer was made for reasons other than obtaining certification, and the disadvantaged owner controls management, policy, and operations of the firm.
Gene, what's the scoop on pre-qualification?
We adopted our proposal to disconnect pre-qualification requirements, which are conditions imposed on companies who wish to bid on certain categories of work, from the certification requirements. Pre-qualification requirements are simply not relevant to DBE certification requirements like size, control, ownership, and disadvantaged status of the owners. This does not mean that pre-qualification requirements established under state law may not be imposed on DBEs. It means that certifiers are to analyze only the factors relevant to DBE eligibility and not incorporate a firm's pre-qualification status as a requirement for certification.
The department proposed several changes to the certification procedures a recipient must follow when reviewing a firm's eligibility for the program. Can you explain the ones we adopted, Gene?
The relevant provision on this requirement is, of course, 2683, where there already appears a list of steps a recipient must take. The minor tweaks to the language are shown on the screen. For instance, we added the phrase, "You may interview key personnel of the firm if necessary." Second, we rephrased a requirement regarding ownership, requiring you, the certifier, to analyze documentation related to legal structure, ownership, and control of the applicant firm. This includes, but is not limited to, articles of incorporation or organization, corporate bylaws or operating agreements, organizational, annual, and board and member meeting records, stock ledgers and certificates, and state-issued certificates of good standing. Third, we require the certifier to analyze the bonding and financial capacity of the firm, lease and loan agreements, and bank account signature cards. Fourth, we require you to determine the work history of the firm, including contracts it has received, work it has completed, and payroll records. Next, we added the requirement to obtain complete federal tax returns or requests for extensions filed by the firm, its affiliates, and the socially and economically disadvantaged owners for the last 3 years. A complete return includes all forms, schedules, and statements filed with the IRS. Lastly, we added to the rule that you may request clarification of information contained in the application at any time in the application process. This does not confer carte blanche authority to certifiers to request additional information beyond that which is currently allowed and subject to prior approval from the operating administration. When this section uses the word clarification, we mean, in other words, if the application material is unclear, confusing, or conflicting, the certifying agency may ask the applicant to clarify information already provided.
DOT proposed to remove a reference to 3-year certification reviews. Brittany Berry with FTA is here also. Brittany, what change was made?
We clarified that a certification review should occur whenever there has been a change in the DBE's circumstances, such as a notice of change filed by the DBE, or whenever a recipient becomes aware of information that raises a genuine question about the continued eligibility of a firm, or after a specified number of years as set forth in the UCP agreement. Here's the important point. You may not, as a matter of course, require all DBEs to reapply for certification every 3 years or go through a recertification process every 3 years that essentially requires the DBE to resubmit a new application and accompanying documentation in order to remain certified. You may, however, conduct an on-site review on an unannounced basis at the firm's office and job sites if you receive information that leads you to question the firm's continued eligibility.
Were any changes made to the annual affidavit requirement?
The requirement stays the same. Every year on the anniversary of the date of a firm's certification, its owners submit an affidavit affirming that there have been no changes in the firm's circumstances affecting its ability to meet size, disadvantaged status, ownership or control requirements, or any material changes in the information provided in the application form, except for changes about which the firm has notified the recipient. The rule asks for documentation which affirms that the firm meets the size and gross receipts criteria. We included as an example of such documentation the submission of federal tax returns, since many recipients already ask for that information.
In the event a firm is denied DBE certification, they of course have the ability under the current rule to appeal that decision to the department. When a firm does appeal, does it extend the waiting period in which the firm may reapply to the program?
No. We added language in 26.86, which clearly states that the appeal of a denial does not extend or toll the start of the waiting period in which the firm may reapply to the recipient.
The regulation provides grounds for removing a firm's DBE certification. Were there changes to Section 26.87?
Yes. The revised provision, again shown here in red, clarifies the grounds a recipient may base its decision when it removes a firm's eligibility.
A new provision appears in the regulation dealing with summary suspension. Beth Newman with the FAA can walk us through this provision and explain how this works. Beth?
The fundamental premise underlying the summary suspension provision is that when a dramatic change in the operation of the DBE occurs that directly affects the status of the company as a DBE, recipients need to act swiftly to address the situation. In cases where the recipient learns that a disadvantaged owner is no longer involved in the company due to incarceration or death, suspending the certification for a short period of time is appropriate. It doesn't matter how long the disadvantaged owner is incarcerated or the reason. What does matter is that the company appears to be no longer owned and or controlled by disadvantaged individuals, as determined by the certifying agency. If a recipient determines after hearing from a DBE that the period of incarceration has ended or will end in 30 days, the recipient will lift the suspension and reinstate certification without initiating removal proceedings. Similarly, when an essential disadvantaged owner dies, his or her heirs, who are also members of groups presumed to be disadvantaged, are not presumed to be able to demonstrate sufficient ownership or control of the company. Remember, DBE certification is not transferable and does not pass to an owner's heirs. In this case, a short suspension of certification until the heirs submit evidence to support a continuation of the firm's DBE status seems appropriate. The sooner the firm provides the evidence, the sooner the suspension can be lifted.
Beth, you describe death and incarceration as two situations wherein recipients shall suspend a DBE certification. Does the new provision authorize a recipient to suspend DBE certification under other circumstances?
Yes, a recipient can immediately suspend a DBE certification without first going through 2687D's hearing requirements when there is adequate evidence to believe that there has been a material change in circumstances that may affect the eligibility of the firm to remain certified, or when the DBE fails to notify the recipient or UCP in writing of any material change in circumstances as required by 26.83, or fails to timely file an affidavit of no change.
How does a recipient suspend a firm under the rule, and what about the hearing requirement?
When a firm is suspended pursuant to this section, the recipient shall immediately notify the DBE of the suspension by certified return receipt mail. Suspension is a temporary status of ineligibility pending an expedited show cause proceeding under 26.87 to determine whether the DBE is eligible to participate in the program and consequently should be removed. The suspension takes effect when the DBE receives or is deemed to have received the suspension notice.
Beth, what's the impact on the firm at this point, and what are its options?
While suspended, the DBE may not be considered to meet a contract goal on a new contract, and any work it does on a contract received during the suspension shall not be counted toward the recipient's overall goal. It can continue to perform under an existing contract executed before the suspension notice was received and may be counted toward the contract goal during the period of suspension as long as the DBE is performing a commercially useful function under the existing contract. If the DBE believes it is no longer eligible, it may voluntarily withdraw from the program, in which case no further action is required. If it believes eligibility should be reinstated, it must provide to the recipient information that it is eligible, notwithstanding its changed circumstances. Within 30 days of receiving this information, the recipient must either lift the suspension, reinstate the firm, or begin a 26.87 decertification action. Suspension is not appealable to the department, but a failure of a recipient to either lift the suspension and reinstate the firm or commence a decertification proceeding as required is appealable. Such appeals will be handled on an expedited basis by U.S. DOT.
Thanks for covering summary suspension, Beth. Let's turn to a clarifying amendment that was made to how firms may appeal to the Departmental Office of Civil Rights. Was there a change there?
Yes, some clarifying language was added to the existing provision. One is requiring applicants to include in their letter of appeal a statement that specifies why the certification decision is erroneous, identify the significant facts that the recipient failed to consider, or what provisions the recipient did not properly apply. We also made clear that the Department's decision on appeal is based on the entire administrative record, including the letter of appeal.
Were there any other clarifying or technical modifications?
A few. For instance, we added to the list of program objectives promoting the use of DBEs in all types of federally assisted contracts and procurement activities. We also added 6 new definitions of terms that include assets, business, business concern, or business enterprise, contingent liability, days, liabilities, spouse, and transit vehicle manufacturer. Some existing definitions were revised, such as the phrase immediate family member, primary industry classification, principal place of business, and socially and economically disadvantaged individual.
For some time now, the Department received questions regarding record retention requirements for certification-related documents, and thankfully, the new rule provides an answer. What does it say?
At a minimum, recipients and/or certifying agencies must keep a complete application package for each firm and all affidavits of no change, change notices, and on-site reviews. These must be retained in accordance with applicable record retention requirements for the recipient's financial assistance agreement. Other certification or compliance-related records must be retained for a minimum of 3 years unless this agreement specifies differently, whichever is longer.
Who must have a DBE program?
We set out to be clear with recipients about their obligation to establish a DBE program and the corresponding obligations to establish an overall DBE participation goal. For FTA and FAA recipients, you must have a DBE program if in any federal fiscal year the cumulative value of DBE program eligible contracts you will award will exceed $250,000 in federal funds. This means you add all the eligible federally funded contracts you expect to award with federal funds. If it exceeds $250,000, you must have a program. You, of course, exclude from this calculation expenditures for transit vehicle purchases. We included some examples in the preamble to illustrate how this provision works.
Martha is here with us from the Federal Highway Administration. Martha, does this change how federal highway recipients are to administer their programs?
No. Subrecipients of federal highway funds operate under the direct recipient's approved DBE program. And, as has been described in official guidance, subrecipients administer contract goals under the umbrella of the primary recipient's DBE program and overall goal.
There were changes to Section 26.45 that were proposed involving overall goal setting, bidders and pre-qualification or plan holders lists, Step 2 adjustments, how operating administrations review a recipient's overall goal submission, project goals, and eliminating from the public participation requirement the need to publish the goal in the media for a 45-day comment period. Martha, can you summarize some of the concerns we received and what the department decided?
Sure. The majority of comments we received concerning this provision were directed at the proposal to disallow use of pre-qualification and other such lists, including the bidders list, in the Step 1 overall goal-setting process, which is establishing the relative availability of DBEs. Some commenters believe these lists are valuable because they identify qualified DBEs that are ready, willing, and able to perform on federally funded transportation contracts. Others, who favor disallowing these lists, believe that they underestimate availability and limit DBE opportunities by restricting consideration of all available DBEs. We decided to retain the bidders list as one of the approaches recipients may use to establish the annual overall DBE participation goal. To be acceptable, however, it must comply with the requirements we specified in the final rule, meaning it must identify the firms that bid or quote on federally assisted contracts, including successful and unsuccessful primes and subs. Recipients will have to demonstrate to the operating administration's satisfaction that the list captures all that is required. If it doesn't, it can be used, but it has to be used in combination with other data sources. On the other hand, pre-qualification lists and other such lists, for example, plan holders lists, may be used but must be supplemented by other data sources on DBE availability, such as custom census data or disparity studies. For the proposal regarding the Step 2 adjustment, the Department incorporated one of the goal-setting principles contained in our guidance that describes some of the circumstances when an adjustment is not appropriate. For example, when the Step 1 base figure and the median past participation are close, or past DBE participation levels reflect the effects of past or current discrimination, a Step 2 adjustment should not be made. If the recipient makes a Step 2 adjustment, which is not a requirement, it is incumbent upon the recipient to explain explain to the operating administration why the adjustment is appropriate. It's important to note that the rule now incorporates the goal-setting guidance issued by the department.
There was mention of a change in the 45-day comment period. Mark, did this happen?
We intended with the proposal to eliminate the publication aspect of the public participation requirement to reduce administrative burdens and costs on the recipient. Running a 45-day advertisement in a cross-section of publications is expensive, and we've learned it does not often yield many comments. However, the revised rules leaves it up to the recipient's discretion whether or not to continue its comment period practice, if the recipient chooses to do so. However, we've shortened the time frame from 45 days to 30 days. The rule still requires the recipient to publish a notice announcing the proposed overall goal, but this notice can be limited to the recipient's website. Remember though, if you choose to publish your overall goal for comment, you still must engage in the required consultation with stakeholders, all of which must be completed well before the deadline for submitting your overall goal documentation to the operating administration.
Transit vehicle manufacturers fall within the goal-setting rules but do not perform certification functions. Let's turn back to Brittany with FTA to hear about the changes that were made that affect TVMs.
The goal-setting methodology used by TVMs must include all federally funded domestic contracting opportunities that have been made available to non-DBEs, not just those labeled available DBE content. Moreover, they should only include the federal share of a procurement that is not performed in-house but performed by outside firms. TVMs are required to establish and submit for FTA's approval an annual DBE goal percentage. They must also comply with the reporting requirements of the DBE rule, meaning they must submit their uniform report of awards or commitments and payments in order to remain eligible to bid on FTA-assisted transit vehicle procurements. FTA will continue to post a list of certified or compliant TVMs to our FTA TVM webpage, and recipients can request verification that a TVM has complied with the regulatory requirements through this source. In order to remain eligible to bid on FTA-assisted transit vehicle procurements, TVMs must also comply with the reporting requirements of 26.11 by submitting the uniform reports of awards or commitments and payments to FTA.
In the notice for proposed rulemaking, we propose to modify the rule that sets forth examples of what constitutes race-neutral DBE participation to remove, as one of the examples, the phrase selection of a DBE subcontractor by a prime contractor that did not consider the DBE status in making the award. For example, a prime contractor that uses a strict low-bid system to award subcontracts. What's the backstory on this?
I can address that. This is Martha with Federal Highway. We only intended to remove this example for contracts that had a DBE goal, yet commenters mistakenly thought we proposed to not allow DBE participation that exceeds a contract goal to be considered race-neutral participation. The department did not propose nor is finalizing removing the other two examples of race-neutral DBE participation or remove the third example for race-neutral contracts. Here is the simple, non-drastic change that was made. The rule removes, as an example of race-neutral DBE participation in contracts that have DBE goals, the use of a strict low-bid system to award subcontracts. It is best shown visually here.
One of the most commented on proposals was the elimination of the responsiveness versus responsibility distinction for when good faith efforts documentation of DBE participation must be submitted on solicitations with DBE contract goals. Martha, can you explain this proposed change and what the department did about it in the final rule?
Sure. The responsiveness approach requires all bidders or offerers to an advertisement to submit the DBE participation information that includes good faith efforts documentation required by the reg at the time the bid is submitted. Responsibility, by contrast, is an approach that allowed bidders or offerers to submit the required information after the bid submission but before contract award. Currently, the recipients have discretion to choose between the two. We propose to eliminate that discretion and require, with one exception, the submission of all information about DBEs that will participate on the contract and the documentation of good faith efforts at the time of bid submission. We also put forth an alternative that would allow a short period of time after the bid submission deadline in which the apparent successful bidder or offerer would submit its good faith efforts documentation. However, in this alternative, the good faith effort documentation would have to relate to the pre-bid submission efforts. No post-bid efforts would be acceptable. The exception to both approaches is in negotiated procurement situations, typically professional services and design build.
We received numerous comments on this, more than any other topic, ranging from those in opposition to support to those offering alternatives. We also reopened the comment period in September of 2013 to hear directly from stakeholders on this proposal, among others. The final rule summarizes these comments and feedback, but instead of recapping those, can you explain what we decided?
Sure. Requiring the submission of good faith efforts documentation that includes DBE commitment at the time of bid as a matter of responsiveness is a reasonable means of reducing the bid shopping concerns raised by many DBEs. Bid shopping is when the identified low bidder on a contract drives down a DBE's profits to encourage the DBE to work as a subcontractor. We recognize, however, that although the majority of states require DBE commitment at the time of bid submission, this responsiveness approach may be more difficult to administer for some primes and recipients. We're also mindful that flexibility is one of the hallmarks of the program, and without more information, we felt we should not adopt an across-the-board approach. We want to know more about whether the responsiveness approach in fact mitigates bid shopping and provides greater or fewer opportunities for DBEs. So in short, we retained the status quo, which allows recipients the discretion to choose a responsiveness or a responsibility approach. The revised rule, however, does put some time limit on how long after bid submission bidders or offerers are allowed to submit DBE commitments and good faith effort documentation. The department went about deciding what time frame is most common by reviewing DBE programs for all 50 state departments of transportation. We think it's reasonable ultimately to limit the time to a maximum of 5 calendar days to protect program beneficiaries and overall program integrity.
So we struck a balance, it appears, since many of our recipients that commented on establishing a limit recommended 1 to 7 days.
Yes, and to provide some lead time for recipients that allow longer time frames in which to submit DBE information to transition to a shorter time frame, the final rule mandates the 5 calendar day maximum to begin January 1st, 2017. Until then, recipients will be permitted up to 7 calendar, not business, but calendar, days to require the submission of DBE documentation after bid opening when using a responsibility approach.
There were proposed changes to the information to be included with bids or offers that would require the bidders or offerers to provide the recipient with information showing that each DBE signed up by the bidder or offerer is certified in the NAICS code for that kind of work the DBE will be performing. Can one of you explain that?
I can. It's Beth with FAA. We did make that change. All bidders or offerors will be required to submit, among other things, a description of the work that each DBE will perform to the recipient. To count toward meeting a goal, each DBE firm must be certified in a NAICS code applicable to the kind of work of the firm would perform on the contract. We aren't shifting the responsibility for the accuracy of the NAICS code assignments from the certifier to the contractor. When the DB submits a bid, it is its responsibility to ensure that the document shows the NAICS code in which it is certified and corresponds to the work that it will perform on the contract. It assists everyone involved to have this NAICS code information up front. It is the recipient's responsibility to ensure that the DBE is certified to do the kind of work covered by the contract before DB participation can be counted.
When we amended the regulations in 2011, we required prime contractors that terminate DBEs make good faith efforts to find a replacement to perform at least the same amount of work under the contract to meet the contract goal established for the procurement. In the proposed rule, the department considered requiring contractors to document the good faith efforts to obtain a replacement and allow recipients to require specific steps be taken to demonstrate good faith efforts within 7 days. Did this make it to the final rule, Beth?
The good faith effort obligation currently exists and isn't new. The good faith effort guidance in Appendix A, used by recipients to assess the efforts made by bidders and offerors before contract award, can also be used to evaluate a contractor's efforts to replace a DBE after contract award. There is no need to separately identify steps that a recipient may require when a contractor is replacing a DBE. Good faith efforts to obtain a replacement DBE should be documented and submitted to the recipient in a reasonable time after obtaining approval to terminate an existing DBE. 7 days is reasonable, but we modified the rule to allow recipients to extend the time if necessary if the contractor requests it. Remember, the reg at Section 26.13b already requires a contract clause be included in prime contracts and subcontracts that make the failure by the contractor to carry out the regulations requirements a material breach of contract, which may result in the contract being terminated or other remedies. We added to the provision the list of remedies we proposed as other possible contract remedies the recipient should consider. There was also a change to 2653H, which is shown.
The Department sought a way to assist recipients in determining the validity of claims made by a bidder or offeror when it claims that a DBE's quote was too high or unreasonable, and consequently went with another subcontractor. We proposed requiring bidders to submit as part of its good faith efforts documentation, copies of each DBE and non-DBE subcontractor quote where the bidder selected a non-DBE to do work sought by a DBE. Gene, did this make it to the final rule?
We are aware that this may cause unnecessary burdens on contractors and recipients, so we decided that bidders, offerers need to provide, as part of its good faith efforts documentation, subcontractor quotes received by the bidder in those instances where a DBE's quote was rejected over a non-DBE's. Only the quote need be submitted in these situations, and only in instances where a non-DBE was selected over a DBE.
The credit DBE truckers receive has been the subject of prior rulemaking, and in this latest proposal, the Department offered to change the counting rule for trucking to allow 100% of a DBE's trucking services to be counted when the DBE uses its own employees as drivers, but leases trucks from a non-DBE truck leasing company. Can you explain this more?
This proposal relates to counting only. In the 2003 rule, we said a recipient may choose a one-for-one option to credit trucks and drivers leased from non-DBEs, or it may limit credit to fees and commissions for work done with non-DBE lessees. If a recipient chooses to count the use of trucks and drivers leased from a non-DBE company, this choice should be reflected in the DBE program plan, which is subject to approval by each operating administration. The new final rule simply clarifies that trucks that are leased by a DBE from a non-DBE for use by the DBE's employees should be treated no differently than other equipment a DBE may lease. In other words, the value of the services provided by the DBE should not be adversely impacted by the fact that the equipment used by its employees is leased instead of owned. D6 was revised and an example added is shown.
The Department proposed to codify guidance it issued in 2011 on how to treat the services of a DBE acting as a regular dealer or a transaction expediter or broker. It also invited open discussion of the whole concept by asking how, if at all, changes in the way business is conducted should result in a change in the way services provided by a DBE regular dealer is counted, what is the appropriate measure of the value added by the DBE that doesn't play a traditional regular dealer or middleman role, and other issues. We decided to codify the guidance, did we not?
We did. Counting decisions involving a DBE acting as a regular dealer are made on a contract-by-contract basis and not based on a general description or designation of a DBE as a regular dealer. I urge our listeners to review our summary of what commenters said on these issues. It is important to remember a few things. First, counting and certification are separate concepts in the rule. Second, DBEs must be certified in the most specific NAICS codes for the type of work they perform. Third, There is no regular dealer NAICS code. It is a term of art used in the context of the DBE program.
Appendix A is guidance to be used by recipients in considering the good faith efforts of bidders and offerers. The department proposed several revisions to clarify and reinforce the good faith effort obligations. Can you elaborate?
Good faith efforts evaluation looks at the quality, quantity, and intensity of the different kinds of efforts a bidder makes. The places in the guidance where we elaborate on the kinds of efforts recipients may consider is shown on the screen. We sought to identify examples of what reasonably may not be viewed as a demonstration of good faith efforts. Rejecting a DBE only because it was not the low bidder or the inability to find a replacement DBE at the original price are not alone sufficient to demonstrate good faith efforts were made to replace the original DBE. The rule already states that a firm's price is one of many factors to consider in negotiating in good faith with interested DBEs.
Well, it looks like we're out of time. Thanks for joining us to hear about the changes to the DBE program regulation, which is effective November 3rd, 2014. And thank you to our presenters, Brittany Berry, Martha Kenley, Beth Newman, Mark Bentino, Adam Rivera, and Jean Roth. A copy of today's presentation and the final rule are available on the Departmental Office of Civil Rights website. You can repeat sections of this training that you wish to hear again by clicking on the directory on the right, and I urge you to read the final rule carefully. Please feel free at any time to contact any of the presenters at the email addresses shown for any additional clarification. Goodbye for now.